Well, hello everyone and welcome to Moementum channel. My name is Mo, and today we are going to talk about our stock market investment portfolio that we have with two brokerage accounts, Questrade and Wealthsimple Trade. In total, we have roughly about $127,500 worth of investments in these accounts. Let's get started with Questrade account. As you notice, majority of our investments in this account, which is about $106,000, is in exchange traded funds. In other words, in a passive investment, about 74 or 75% of our investments are in ETFs. The remaining about 25% is in stocks, and we have a small portion in cash. We're going to take a look at our holdings, but before we do that, let's show you quickly what is the breakdown of our this investments by different types of accounts. We have two sets of registered accounts. The first one that you notice here is the tax-free savings account, the one I was highlighting. As the name suggests, any investments made through this account, all our gains are actually going to be tax-free. The other set of account that we have here in Canada is RRSP. It's a registered retirement savings plan. This is the account that offers the option of tax deferral. As you add your money to these type of accounts, you're kind of deferring payments on those amounts. It's deducted from your income, but later on down the years, as you withdraw money from it, it's subject to tax at that time. We do also have two margin non-registered accounts. You notice one of them, which is the larger account here, is actually in fact our Smith Maneuver portfolio. For those of you who might not be familiar, Smith Maneuver is a technique that allows homeowners with a principal home of at least 20% down payment made on it to take advantage of it and tap into the equity of their principal residence to borrow it to invest, whether it's investing in the stock market, real estate, or other income producing investment options. In our case, we are tapping into that equity in our home and invest that in the stock market. Let's take a look at the specific top holdings in our portfolio that we have with Questrade. The largest holding that we have here belongs to the Vanguard All Equity Exchange Traded Fund with ticker symbol VEQT. It's available in Canadian dollars, as you notice by the currency, and it is our largest holding by the market value, currently having a value of about $75,400. We do have a total of 2,298 shares of VEQT. This account is currently down by about 9.5%, or down by about close to $8,000. But it is an investment option for us long term. It's an exchange traded funds, and we are constantly and gradually adding and buying more shares of VEQT. VEQT, we do currently own it as part of our Smith Maneuver portfolio. It does pay a distribution, but it's only paid once a year, typically in the January of the subsequent year, which makes it simpler when it comes to calculating any impact of capital gains or return on capitals for the sake of the taxation purposes. The second biggest holding we have here with Questrade is Boeing. It is currently down by about 37%. Our average purchase price for the shares of Boeing is at $255.73, but the last trading price for Boeing shares were at $160. Hence, that unrealized loss of 37% this time. Canadian Solar is another investment. It is available in US dollars stock, even though it's a Canadian business and even the name has the word Canadian in it. We do have 120 shares of it. For a long time, we were actually at the negative territory for it, but finally, the stock has kind of turned things around, and it's last traded at the price of $44.04 at the time of making this video. And as a result of that, our shares are showing to be finally up by 2.5%. TQQQ is a leverage investment fund that allows us to triple the exposure to actually NASDAQ. And here we are noticing that we are currently down by about 5%. Next, we have some shares. We have 10 shares of Alphabet Google. It is currently down by about 0.01%, almost at the stagnant level of no gain or no loss. Poshmark is one of those more of a speculative stocks that we had bought. We had 100 shares. Unfortunately, it's down by close to 59%. Same goes for EVgo. We have about 110 shares. It is down by close to 45%. Tattooed Chef is another speculative stock that over time it's definitely performed poorly for us. We are currently down by about 67% for this TTCF. 𝗖𝐋𝐈𝐿 is one of our other holdings we have. We do have a couple of these shares in our account with Smith Maneuver. We are showing a total of 31 shares here. And this is as part of that account. In fact, our Smith Maneuver, as you notice by the account number, and it is just up by about 0.5%. And lastly, our 10th spot is Hyliion, another speculative stock that unfortunately is down heavy. It's down by about 79%. As you notice, this account is currently in unrealized loss of about $11,700. I want to dive deeper a little bit into the VEQT because it is a big portion of our portfolio, and you get judging by the amount that we are invested in it. It's a big part of that exchange traded funds exposure. VEQT, for those of you who may not be familiar, is an all-in-one exchange traded funds, which allows you getting that diversification into stock market, getting full exposure to stock market investment, more of a little bit of aggressive in that sense that we don't have any fixed income or bonds, but it simplifies it by the fact that you just have to buy one fund, and in itself it consists of 4 different other ETFs. You have Vanguard US Total Market Index ETF, which accounts for about 43%. This gives you exposure to the US stock market. Then you have Vanguard FTSE Canada All Cap Index ETF. This gives you exposure to high quality Canadian stocks by about 30%. Next, you have Vanguard FTSE Developed All Cap ETF, excluding North America. So this gives you exposure to developed countries, companies and businesses by about 20%. And lastly, we have Vanguard FTSE Emerging Markets. And here you get exposure to all cap size emerging markets by about 7.5%. Only these 4 funds account for the entire 100%. And as the name suggests, and as I indicated, just by buying this one fund, you're already getting that geographical diversification as well as diversification by the industries and sectors, as pointed out here for you in this chart. It is available on Toronto Stock Exchange with ticker symbol VEQT, and it's available in Canadian dollars. This ETF has its inception going back to 29th of January of 2019. And it has a low management expense ratio of 0.24%. While it might be slightly higher than the management expense ratio of each one of these separate 4 ETFs on their own, the fact that here you are actually getting that simplified approach of just picking one ETF without having to worry about the rebalancing or having to worry about adjusting which one of these ETFs you're going to buy separately. That's just the advantage that comes with it, and hence you're paying a slightly higher fee, but still the fee is very minimal. If you invest $10,000, your fee in a year would be only about $24. In the grand scheme of things, it's actually very minimal and nowhere near the fees that you would be paying for, let's say, for a mutual fund or similar type of investments. From a risk rating, you're looking at a medium risk rating for VEQT. If you look at the past performance of it by the year, in 2020, this fund was up by 11.25%, and in 2021, it was up by 19.66%. Not bad at all. Looking at the best and worst 3 months return, the best return goes back to the 3 months ending in 30th of June of 2020, where it had a 3 months return of 16.2%. And the worst one was just the quarter before that, ending 31st of March 2020, whereby that quarter had a decline of 17.5% in the value of this ETF fund. And as we talked about management expense ratio, that's another thing for you to consider. Next, we're going to take a look at our holdings that we have with the Wealthsimple Trade. Here, our account consists of our non-registered personal account with 8 different holdings, registered retirement savings plan with 10 different holdings, and tax-free savings account with 18 different holdings. We do have a small position in our crypto account that is showcased here, but we've taken that out of the total calculations for our account in terms of value. Let's take a look at our non-registered account and our 8 holdings and our overall return as showcased by all-time returns. We do have shares of Bank of Nova Scotia, Emerge Arc Genomics, Real Matters, Royal Bank of Canada, Toronto Dominion Bank, Verizon, iShares, Core Canadian Quality XDIV, and we also have some shares of 𝗖𝐋𝐈𝖖. The best performing here is actually our investments in currently Bank of Nova Scotia, as well as Royal Bank of Canada. Royal Bank of Canada, we are up by about 11%, and with Bank of Nova Scotia, we are up by about 9.5%. The worst performing holding here actually belongs to Real Matters. We have 439 shares, which is down by 47%. Closely following that is Emerge Arc Genomics and Biotech ETF, which is down by about 46%. Next, let's take a look at our account with our registered retirement savings plan. There are 10 positions here. These positions include Artist Real Estate Investment Trust, Dividend Growth Split Corp, Green Lane Renewables, PIMCO Dynamic Income Fund, Royal Bank of Canada, Skyworks Solution, Toronto Dominion Bank, VDY or Vanguard Canadian High Dividend Yield Index ETF, Vanguard S&P 500 Index ETF VFV, and iShares Core MSCI Canadian Quality XDIV. The best performing holding here, in fact, is our Artist Real Estate, as you notice, by a return of about 11%. And if you look at our worst performing holding here, that belongs to Green Lane, which is down by close to 30%. We have 110 shares of Green Lane in this account. Next, we're going to take a look at our holdings in our tax-free savings account. Here we have slightly larger holdings. We have 18 different ones. The first one to look at is Bank of Montreal. Then we have Bank of Nova Scotia, Beyond Meat, Evolve Automobile Innovation Index Fund, CARS, Emerge Arc Genomics and Biotech ETF, EAGB. We have some more holdings of Green Lane, Hyliion, Manulife, NEO, PIMCO Dynamic, Plug Power, Invesco NASDAQ 100 Index ETF QQC.F. We also have shares of Real Matters, Royal Bank of Canada, Shopify, Toronto Dominion Bank, VDY, and VFV. In terms of the worst performing holding here, I'm looking at NEO as well as Beyond Meat. With Beyond Meat, we are down by about 75%. It's huge negative unrealized loss. And then we also are looking at NEO, which our 14 shares are down by close to 63%. In terms of our best holdings here, it's a bit hard to find because many of our holdings here on our tax-free savings account are currently in the negative territory. However, if we look at the ones that are slightly better than the rest, I probably would end up landing on Manulife, which you're seeing a positive return of 1.61%. Almost all of the other holdings are in negative territory. We do have Bank of Montreal as well with about 1.5% return. Well, there you have it, folks. A quick look into our holdings that we have with Questrade and Wealthsimple Trade, currently hovering around that $127,500. It's definitely has shown some decline compared to our last video that we made covering this account about a week ago or so. This has to do with the stock market volatility, and this is also despite the fact that we've added more funds to our accounts and added some more funds to our portfolio and use that money to invest. It's always like the short-term volatility of the stock. We are not worried about that. We are here for the long haul and are looking forward to continue to build this portfolio into a much larger position. I hope you found this video beneficial and gained something of value from it. If you did, don't forget to smash that like button. And of course, subscribe to our channel and to stay tuned about our future of this portfolio and as we grow this into $1 million portfolio. We also on our channel talk every week about investing in the stock market, including investing in dividend stocks, growth stocks, penny stocks. We also talk about investing in crypto and ways to reach financial freedom. Thank you, and I hope to see you next time.